Well, what's going on, friends? Your man Omid here with you once again. I'm excited to bring you some good news, hopefully, some relief. We're going to do this a little out of order today. So, this is exciting. The odds of a federal Fed funds rate cut by September are almost at 100%, 95.3 to be exact. I think with President Biden's jumping out of the race, my original thought that nothing was going to happen until right before November as a way to push this thing up, I think that's been accelerated at this point. The traders are saying that there's a 4.7%, 5% chance that the Federal Reserve will reduce this thing by 50 basis points. Currently sitting at 5.25, that would make it 4.75. I don't think so. I think we're going to get a quarter at first for Jerome Powell to test what's going on out there. The reason why he's doing this is that the employment numbers have been growing softer and softer. Inflation has been coming down, and we'll talk about that a little bit in the next couple of slides about what's going to happen on Friday. And I think also there is a less folks that are job hopping for bigger and better jobs. That has slowed way down. So all of those things shows an economy that is slowing down a bit and really showing its true colors, which it should have shown. But because of the last so many months, the way that the BLS reports, job reports and stuff, we've seen what we've seen. I'm not going to bore you to death and repeat what I've always said on these calls, but I think it's starting to be a little bit more truthful. Okay, so this is great news, and let's see how that goes. What's going on in the marketplace today? Like, we've had a small contraction for the last 3 or 4 days. Nothing huge, nothing that's been earth shaking. As I always tell you, whenever you see the stochastics sitting up here in the overbought territory, um, traders will do bond trading and they will take profits off the table, and that's what we're seeing here now. Is a little skosh underneath this thing, so nothing detrimental. What does it mean for rates? Well, 6.82 last week, 6.89 this week. Okay, not that huge of a deal, nothing to get kind of stuck on, especially with the good news that's hopefully right around the corner. All right, so what's happening this week? Nothing on Monday. Tuesday's existing home sales, new home sales on Tuesday and Wednesday. These are a little bit of a fluff more than anything else. They're not necessarily market shaking or market moving. I will tell you what is market moving right after I ask you to please share this stuff with at least one person you know and love and like. We need to get education in the hands of folks that need it so we can all understand better as to what's happening and then make the best decision for ourselves and our families. So please and thank you. Share with at least one person. Thursday, durable goods orders, Q2 GDP, very, very important. Q2 gross domestic product, really our country's output is what's being measured here. So that's how we measure the economy, not the stock market. I know a lot of folks like to say, well, the stock market's so hot, the economy is great. That's not necessarily true. Stock market is buying and selling shares in the country companies. This thing has to do with our output as a country. Initial jobless claims is due out on Thursday. We'll have to see how many people have filed for first-time benefits for unemployment. That'll tell more of a sign of weakness. And then, drum roll, please, PCE report. This is the Personal Consumption Expenditure Report. That is the Federal Reserve's favorite way of measuring inflation. That's going to come out on Friday. My guess is that that's going to be lower than what it is that we expect. And so, hoping that that pushes them a little bit closer to that decision for September. But remember, if you're a home buyer listening to this, if you're a selling agent listening to this, consult with one another, because as soon as those rates jump down, say from 7 to 6.75, from 7 to 6.5, whatever that correlation ends up being, you're going to have 300,000 new buyers into this market like that, and housing prices are going to jump up a good 5, 8, 10%. So get in while the getting is good. Get in where you fit in, like they say, right? Speaking of fitting in, we are really fitting in. CMG Home Loans has been chosen as the best HELOC lender in the country by CNBC, which is a huge honor. If you don't know, we have a proprietary chain block driven HELOC that basically you can qualify for in the next 5 minutes, and you can have the money in the next 5 days. It's very, very fast, very quick. Everything, all the income and asset documentation, etc. They'll do all that stuff in the background for you. If you're interested in learning more, drop me a quick email back here, and I'll send you a link, and you guys can jump on there and apply and maybe put a HELOC on the house, because you never know when you need access to the equity, and we've all built up so much equity. Okay, so As always, please like and subscribe and comment and forward these on to your friends so we can all get educated. Appreciate all of you. Have a fantastic week. Stay cool. Hopefully this week anyway is going to be a little bit better than last week out here in Seattle. But man, is it a scorcher. It's what we wait for all year, and then it gets here and then we complain. So have a fantastic week. Enjoy the sun. Cheers.